morning, good evening, and good afternoon, everybody. Hope everybody's had a fantastic week. It is Thursday. You know that means that it is time for high probability short-term profits with Mike Wade. We'll get to it in just a second. First up, we're going to go through a really quick review. Just so you do know, this will be the last show until the new year. So the week of January 6th will be whenever we pick things back up. But today we're going to go over a quick market review. We're going to talk about our snipers portfolio, still at that 91% win rate, 11 straight wins. You got that streak going again, don't you, Mike? We're going to talk about a recent trade. We're going to talk about Lovesac. We're going to talk about a current trade that we're going to go over today. I'll let Mike tell you all a little bit more about that. Then we're going to go over some of your audience stocks. Mike, let's get to it, man. How you been? I feel like I haven't seen you in like a month.
It's been about a month, man. I haven't seen you since Thanksgiving, or right before Thanksgiving.
That's crazy.
You know, I came down to Houston for Thanksgiving, and I was supposed to go back to Costa Rica on the 8th.
Mm-hmm.
And I ended up getting COVID. So I've had COVID for 2 weeks. Yeah, that's my third time.
Jeez.
But yeah, I'm ready for Christmas, man. It's next week, and I'm at my mom's house. You probably don't recognize the backdrop. I'll be back in Costa Rica on the 29th, and then, as Ryan says, we'll see you all the week of Jan 6. So this is our last show for the year, brother.
Man, feels good. It's been a good year. It's been a really good year.
Yeah, you know what we should do, man, is put up our portfolio, because this is the year. This is what we've done this year. We've had, I can't read that number there, Ryan, 100 and some trades, top right. Yeah, there we go. 57 trades. We've had 57 trades. That's just over one a week. 91% of them this year have been winners. And our average profit per trade is 11%, over 11% every 6 days. Now that 11% bakes in how many losers did we have? We only had 5 losers all year. You know, our game here is short-term, high probability profits. You know, 11% doesn't sound like a lot, but when you can do that every 6 days, you could literally take an amount of risk. Our average risk was 370, and you can literally take that money, and as the averages pan out, you could reuse that money 4 times in a month, generating 11%. I mean, that's statistically mathematically possible. So this is our game, like a sniper behind a wall, relatively safe from getting shot. You know, that's our game. I like to think of it as another analogy I like is Moneyball, the movie Moneyball, where the Oakland A's just put players on their roster that just got on base. Walking was fine, and they ended up going into the playoffs. MLB playoffs. So it's like that. Get on base, strike out 1 out of 10 times, and the numbers do stack up. We've had quite a really good year, Ryan, and I intend to do it again next year. So let's take a look at the markets, Ryan, because I don't know if you knew, but something happened yesterday. Do you know what happened yesterday?
I do know what happened yesterday.
What happened?
They dropped slashed rates, didn't they?
Well, yeah, by a quarter point. I would say, a little maybe fingernail clippers.
Not slashed.
Rates, 0.25%. And that's what everybody expected now. The inflation is in reasonable bounds. But the problem that we have here with the new presidency, Trump is talking about tariffs, big tariffs for our international brethren, let's call it. And that could, if the States is putting a tax, essentially a tariff on incoming goods, that has the impact of lifting prices. So the Fed knows that. There's also rate cuts that are being, not rate cuts, but tax cuts that Trump's talking about for corporations, and all of that makes the Fed spooked. It's like, oh my gosh, I mean, we got to be really cautious. And the cautiousness we knew was here, but the problem that the markets reacted to, well, the markets saw it as a problem, is that the Fed only anticipates 2 more rate cuts in 2025. So when that came out, and that came out at 2:30 when Powell has his speech, the rates come out at 2, rate decision comes out at 2:30 Powell speaks, and then he dropped that bomb on the market, and it was a bomb because Ryan, man, here's the S&P 500. This is right here. Let me zoom in a little bit. I'm using the Hub software. If you want to check this software out, just go to hub.com, HUBB.com. And you can see this was such a shocker for many of us. The S&P 500 was down 3% yesterday. Before the announcement, we were sitting up here above 600. That was super strong support. Before Powell spoke, and then after, ba-boom, the markets collapsed about 3% across the board. The NASDAQ was up about 3.4%, but huge, 2 to 3%. Let's say an average of 3% across the 4 markets: the S&P 500, the Dow Jones, the NASDAQ 100, and the Russell 2000. All of them within the neighborhood of 3%. Massive correction coupled with, you see this red bar down here? This is volume. I like to think of volume as institutional conviction. Institutions are responsible for 75, 80% of the market, especially the S&P 500 stocks. So if us retail traders, we're just like a, tail on the dog. The dog is institutional, and you can see here that they dumped the stock market with great enthusiasm, twice what it normally is. So that's a way to think of it. And then from there, you can start to derive a prognosis from here. Technically speaking, I would say there's more probability of downside from here than upside. However, at least for the futures are all up. You can see here, the Dow's up 0.76%. These are the futures. The market will open up in 8 minutes. And when it does, expect to see the Dow up about 0.75 of a percentage point, S&P 500 about the same, NASDAQ 0.69%. So the futures are up. There's, Ryan, there's a lot of adages in trading, and one of them is called a dead cat bounce. Have you heard of dead cat bounce?
I have, yes. I don't know exactly what it means, but I've definitely heard of it.
Well, I'm an animal lover, so it's not an analogy that I use very often. But if you were to drop a cat from a high floor, the cat would hit the ground and bounce because I shouldn't laugh, and then be dead anyway. And so the markets are up a little bit today. That could be a dead cat bounce. All right, so I'm going to hold on to a bearish prognosis. Further downside is more likely than upside, and I can use the high of the bar for yesterday as my bullish trigger, and then I'll draw another line down here. So what I'm trying to do is figure out some kind of objective way to forecast where the markets might go next, and so you can draw a line. I'm having trouble with my mouse here. Sorry about that. You connect the bottom of the red bar and the top of the red bar. Today we're getting our little bounce. Maybe it's a dead cat bounce, meaning that it's going to fail and then continue dropping. Or maybe we get a recovery and we close above here. That would designate a further upside, a bullish prognosis. And then if we get a close below this 585, let's call it 585 to make it a round number, or 586. If we close below 586, then expect further downside. Other than that, I would say the market is more likely to dance in this range. All right, so let's not get too excited about this massive sell-off yesterday. Let's use technical analysis to tell us if further downside is likely. That would be a close below 586, or maybe we're going to recover. I would not have a bullish prognosis until we close above the high of this bar here, which I'm going to give you a number. Let's call it 604. So that's a 604, a close above 604 on the SPYs, or a close less than 586. If you see that, then that would be the most reasonable follow-on prognosis from here. All right. Now, there's one other instrument. I'm actually, let me take you through the other ones just really quickly, just to show you how broad-based the sell-off was. Here's the Qs. Boom. Massive rundown, 3.61% on the Qs. This is the NASDAQ 100. Massive volume. And then we got the Dow Jones Industrial Average, the DIA, crashing below the 50-day average on twice normal volume. That index was down 2.61%. And then the IWM was down a massive 4.43%. Now, this makes sense. I'm doing more market analysis than I normally do because there's a lot of interesting stuff here that can help you predict. Small cap companies, the smallest 2,000 market cap companies, presumably because they're smaller, are borrowing more money. And when the Fed cuts rates, that makes the cost of money cheaper, and that helps small caps. So this index got hammered almost 4.5%, which is just astronomical, because the Fed said they're not going to cut rates very aggressively next year, maybe 2, data dependent. And so the small caps really took it on the chin. Now, across the board, futures are up. 223 is where we're going to open. So the futures are up right about here. Is that going to be a dead cat bounce, meaning that the bounce will fade and further downside? You just got to wait and see. Look for a close below 220 on the IWM to designate further downside. Other than that, wait for it to crack above the high of this bar here, right there, and that's 232. So for at least for the first part of the market, we're going to dance within the body of this red bar. That's called an inside day. Doesn't mean anything until we breach the high or the low of yesterday. All right, Ryan, that's what I have on the markets. Really interesting time. Now, the other thing that's really cool is when markets do this, there's an index called the VXX, and this is a stock that has options, actually. And the VXX tracks the implied volatility in the market. Now I'm trying to find it. There. Where is it? There it is. Got it. Look what happened to the implied volatility with this recent correction, yesterday's correction. The expensive options rose. All right, you can see here, this is measuring fear in the marketplace. It's measuring expense of options. And options got a whole lot more expensive yesterday, and that's good because we want to sell them. We want to be net sellers with credit spreads. So, Ryan, let's talk about our trade for today. And I'm going to let you put up that graphic real quick. But our trade for today is on Palantir. All right. So why? Well, one, Palantir has gapped up. The question next is why? Well, they just got a $619 million contract with the U.S. Army. This is an artificial intelligence software company, and they're up 3% pre-market. All right, so there's good news, really good news. That's a lot of revenue. And the stock's up huge. It was down 4% yesterday. Today it's up 3%. Let's go to the stock chart. I want to put this trade on here right as the market opens so we can capture as much implied volatility as possible. Here's Palantir. Now, unfortunately, I'm missing some data here, so I'm going to take this to a different chart. And let's take a look at PLTR. All right, now what I love about this chart now is, first off, the stock, after the news, after the Army contract was awarded, is trading up here at 75. Yeah, about 74, 75. So the stock is up right about here. Now, that's good. 75, by the way, is resistance. That's could very well hold. So that's not ideal. But yesterday, and this is the part I love, is yesterday the stock did not drop so much. It actually held right here at 70. So let me zoom in here so you can see this a little better. And so there's Palantir. You can see it. That's the action for this morning. Yesterday, the whole market, there was a bloodbath, and Palantir came down but stayed above this 70 level. So now that the situation we have is that 70 is mega strong support, and 75 is also resistance. Let me make this exactly 75. So we've got a little decision to make. This has me want to be a little more conservative with where we sell our credit spread. That's 75, that's 70. You can see here the stock tends to want to bounce between these levels. It's trying to get above 75. The high of the day was so far was 75.09. Looks like it wants to get above. It's either going to, one of two things is going to happen for sure. Palantir will not close above 75, or it will. If it does, that's better, because then 75 becomes support. All right, so notice here, this level at 75.12 right now. So it's trying to get above 75. It's either going to do that or not. We'll have to wait and see. Anything is possible from here. So now the question is, given 70 was so strong during the bloodbath yesterday, looks like that the stock definitely wants to stay above that level, or institutions want to keep it above that level. So that should hold. And then we've got 65, another round number right there. Look left and notice how 65 was resistance here and then became support there. All right. So that's a good level. I would say selling no closer than 64. But what I think I want to do here is see if we can get all the way down here to 60. All right. So 60 would be this line. Let me make this a purple line so you can see it. Now I'll make it dotted because that's what I like to use to designate my lines in the sand. So I would sell as close as just below 65, but I want 60. And so what do I mean by lines in the sand? Well, a line in the sand is a place at which we sell a credit spread and we make money on one side of the line. So what I'd like to do here is put on a trade that makes money as long as Palantir stays above 60 for 2 weeks. Now, what would keep it from getting to 60? Well, oh, look, it's actually making a run above 75. I got to hurry. 70 support, 65 support, and then you get to 60. So we've got multiple levels of protection. If we can get something at 60, let me go look. And what I love about Palantir, one of the other things is that it has weekly options. So we can get in right around 15 days. 2 weeks is the sweet spot. And so I'm going to go ahead and in the simulated trading environment, what I want to do is look for 15-day options that expire Jan 3. And to remind you, I want to make money anywhere above 60. All right. So what I need to do is sell a put credit spread at 60. I'm going to tell you how you can find out what I'm talking about if you don't understand. And then I'm noticing here that there isn't a credit shown. All right. So if I sell at 60, buy the underlying put, it's not even showing a credit. If I go up to 61, there's 4 cents. If I go up to 62, there's 7. 63, there's 5. 64, there's 9. All right, what does all that mean? Well, it means that there's not enough credit down here at 60. I've got to move my short put, my line in the sand, up to 64 in order to get enough credit. What's enough credit? Well, 10% of the spread width. And you can see there that is $1. So 10% of that is 10 cents. So I want to make at least 10 cents. That's my order. I'm not going to take anything less if I can get it typed in. I'm not going to take anything less. Currently the mid price is 5. I'll do 5 contracts. So we're going to sell 5 of the Palantir Jan 3, 64 puts, and then buy the 63s underneath. If you do that 5 times and you can get 10 cents credit, then your max risk in the trade would be $450. The max risk per contract for one is 90. There's formulas in the software, in the guidebook I'll tell you about here in a minute. The guidebook will walk you through the formulas. But one contract, if you get 10 cents credit, your risk would be the difference between the strikes minus the credit. That's 90 cents. 90 cents or $90 for 100 shares controlled is what it would cost you in risk per trade. So you want to manage that. Don't go too high. I'll do 5 times $90 of risk. It's $450 of risk in this trade. Okay, so mid price is 8. Nope, I want 10. Give it to me or not. I'm going to let this trade come to me. You can use GTCs to spur on a fill. Oftentimes you get a quicker fill if you specify GTC. But if you do that, be sure to cancel it by the end of the day if it doesn't fill. Confirm and send. Send. Go back to monitor here. And let's take a look at our order. There it is. And I just got 12 cents in a simulated account. All right, so here's the order that was just filled. Sell 5, PLTR, that's the symbol, Jan 3, 64 puts, and then bought the underlying 63 puts, same number of contracts, 5, and the net credit for both was 12 cents. Let me make it even more clear. So we've got the Jan 3 options. We just sold the 64 put, and we're buying the 63 underneath. And we just got 12 cents, but get at least 10 cents. And if you get filled on this, let us know. We'd like to hear how you're doing with this stuff. And then you have your trade. So now we have a trade that will make money as long as Palantir stays above 64 between now and January the 3rd. Looks like it wants to do that. It for all the reasons I said before. And look, Palantir is making a run. It's at 75.96. Now, we'll have to wait and see at the close, but this thing closes above 75. That's going to be really good for this trade over the next couple of weeks. And we have holidays coming up over the next 2 weeks. We get free theta, free time decay during those holidays. And we have a lot of moving parts here, Ryan, that make this a really good trade. How about we look at other possibilities? What is it? What do the students have for us, buddy?
Let's see here. I am seeing MU Bifecta.
Micron Bifecta.
Yeah.
Yeah, let's look at Micron. I was looking at this one. Stock traders don't like these kind of charts, but option traders love these kind of charts. So Micron tanked. It's down 16%. Why? Well, earnings just came out. Now, part of the system, a big part of the system is news. And you can get news on your broker's site. You can go to finance.yahoo.com, finance.yahoo.com, and you can get news. So let's take a look and see what happened. Now, Micron announced earnings. So I'm looking for news here. Micron downgraded by Bank of America. Micron slumps as bleak quarterly forecast clouds AI related boost. Now, here's the contradiction. So they offered a bleak quarterly forecast, and maybe that's going to be enough to offset their earnings beat. So they beat on earnings. So the past was good, the future bleak. All right. Now, ideally, they missed on their expectations for the past. So ideally we like to see them miss on their EPS, earnings per share, on their earnings announcement from the past, and then lower future guidance. That's the what I call the bifecta. That is the best news we could get. But they did beat on earnings. Okay? So the news is actually mixed. So let's talk about what that means. Well, what it means is that the stock has already been hammered 17%. The stock is dancing with 85. Let me show you 85 on the chart. All right, so notice back over here in my community, mwtradecoach.com is where you can learn more about my community. And we use support resistance like nobody's business. And one of the sayings I have is look left. And if you look left at an exactly 85, a round number, support. So that level is support. And so far today, the stock has gotten pretty close to 85. But given, and here's back to the beating on earnings. So when they beat on earnings and they offer a bleak forecast, the stock has already been hammered massively. There's a strong chance, because they beat on earnings, that the stock could bounce. Now, is it going to bounce back up here? No, I don't think so. So here's what I'm going to do. I'm going to count on the stock bouncing. It's either going to do it or not. And then I'm going to see if I can catch some credit by selling all the way up here at 110. And this trade that I'm about to do would make money anywhere below 110. And I've got to worry about that because they beat on earnings. It's probably going to stop dropping and it could recover. So I want to give myself enough room for there to be a recovery if there is, in fact, a bounce off 85. And if it does that, I want to give it plenty of room before I get into trouble. And so 110 would be a no-brainer. Now, how low would I go? Well, I would say 105. Look left, and look to see when there's turning points. Now, I already know that's going to, I put my cursor there right at these bars, but I already knew that 185 is likely to be a 105, excuse me. 105 is likely to be a resistance support level. Look left. Look at how many times this 185 or 105 level kept the stock from dropping or kept it from rising. So 105 would be as close as I would get. So here's what I'm going to do. I'm going to try to get something for 110. And if I can't get anything, I'll drop my calls as low as 105 or drop my line in the sand as low as 105. But for me, no closer, because there could be a bounce right off this 85 support level. All right, hopefully that makes sense. Let's see if we can get 110. Oh, you know what I forgot to check? I forgot to check the options granularity. I already know Micron is in good shape, though. So ideally, you have weekly options. It's not the case. Not all stocks have weekly options. But let's try. January the 3rd, same as what we did with Palantir. All right, 15-day options. All right, so I'm going to try for 110, selling the 110 call and buying the 111. Don't see anything. There's nothing there. If I drop it to 105, there's only 1 cent credit there. All right, not enough. Minimum is 10% of the spread width. That's $1. I need 10 cents. There's only a penny credit available. And then from here, you can keep going down and try to figure out where you can get 10 cents. And as I do that, it looks like Let's see, if we did 100, 6 cents at 100, we're going to have to go all the way down to, it looks like 96, 95, 97, 97, 97 is how close we'd have to get and use Jan 3 options. So that's way too close for me. 97 would be right here. There's 97. So I don't like that. I don't like this. A little bit lower than that. I don't like that. We could easily bounce back up here. So here's what I'm going to do. I'm going to put an order right here at 105. And this is only going to get filled if we get a bounce. We get something like this happens, then we have a shot at getting filled right up here at 105. All right, so I'm going to put an order in at 105. Let's see. The current price is only a penny credit. That's not going to happen unless we get a solid bounce. I could also try going out one more week, and even there's only 2 cents. So let's just put the order in. We're either going to get filled or we're not. I'm going to let the trade come to me. And if I don't get filled, I'm cool with that. I'd like to get filled, but I don't need to get filled. So let's put a hook in the water. That will get us a nice little credit. If there's enough of a bounce, I'm going to confirm and send this Jan 3 105s. And let me give you this trade so it's really clear. Micron Jan 3 105 calls. And buying the 106 above. All right, so this is the order. Sell to open, Micron, MU is a symbol, Jan 3, 105 call. And then buy the 106, same stock, expiration, option type. Your GTC limit is 10 cents. And let's let it sit. You're either going to get filled or not. I wouldn't go much lower than... maybe 100 on this one, but I wouldn't go any lower than 100. All right, now one last thing I haven't mentioned, I didn't mention on the last trade, but if the stock crosses on the other side of your line in the sand, your short option, strike price, then you close it down and manage the risk. Collect your profits by putting a buyback, buy the spread back for 10% of the original credit. You get 10 cents, that's a penny. Make that GTC. And then the profits will come off automatically. And then the good news there is if we do get filled up here at 105, then all you got to do is nothing unless the stock is above 105 right at market close. Close it down for a managed loss. All right, Ryan, that's a good one. I like it. Unfortunately, there's not enough premium yet, but if we get our bounce, we'll be in good shape.
Nice. Very cool. I got one more for you if you got time.
Yeah, man. Let's do it.
LEN.
Lennar Homes. Let's see what happened with Lennar. I know I was looking at this one. Lennar came out with earnings, and you can see here the stock came down pretty hard and has started a bounce. Let's check to see what the news is on this one. So Lennar, let's see. Lennar sees sequential decline in home deliveries as fiscal fourth quarter results miss views. Okay, so they missed on earnings and revenue estimates. On increased costs from higher interest rates. Slides after earnings miss. Yeah, it's good. It's good. Report sales below analyst estimates. Yeah, so that's the reason Lennar has come down so hard. It is bouncing. All right, now let's check one thing before we get too excited. Let's check and make sure that Lennar has weekly options. It does. We can do a 15-day trade. All right, good. Now, should I put my line in the sand? All right. What I don't like is the stock has already bounced, so it could continue bouncing. 160, if you can get it, is a no-brainer. All right, I'm not going to do this one, but I want to just give you some guidance. I would say 160 is the safest and closest place that I would want to get. And then you could go to 150, but I think that's too risky given the stock is already starting to recover. So I would say 160, maybe. I'm going to say it. Let me just be very, very clear. Don't go any closer than 155 and ideally 160. So similar to the Micron trade, there is a bounce happening. You could place an order up here at 160 and let's just go see what's there. Jan 3s, 160s. There's only 2 cents credit if you go to Jan 3s on this one at 160. If you sell at 155, I'm just not seeing enough credit here, Ryan. You'd have to go all the way to 150. So selling the 150, buying the 155 to get 10% of the spread width, which is 5. So I need 50 cents there. That's the first place we can get 50 cents or higher. But the problem with that is that it's too close. 150 is too close. If the stock was setting lower lows, I'd maybe think about it. But we could very easily be back up here above 150. So what I would do then, based on what I just shared, is I would go after the 155s. And then I'd put an order in for at least 50 cents, selling the Jan 3 155s, buying the 160s, and put an order in for 50 cents. And that would be a decent trade. All right, Ryan, I think that's all for today, but I would like to talk about our guidebook because I know there's a lot of moving parts here, right? Credit spreads, lines in the sand, earnings, guidance, EPS, future guidance, different types of news. So the system, I've been doing trading. I've been trading full time since '98, and I've been teaching since 2001. And this is a system that I've really built over time, and it's a fairly rote system. It's extremely discreet. It talks about all the steps I do here. How do you find candidates? How do you derive lines in the sand, I call them, support resistance levels at which to sell credit spreads? What's a credit spread? You need to understand how to construct a bullish credit spread, a bearish credit spread, the rules for that. And then lastly, the most important step, 5 in this guidebook, is managing your trades. So the guidebook is free. The idea is you grab it, you read it, lots of pictures and illustrations. I think it's well written because I wrote it. It is actually pretty well written. It's simple, I think, as simple as I can make it. So grab the guidebook. It's right down below. Put in your email address and we'll email it to you. And then you can join Ryan and I every Thursday at 9:15 Eastern where we snipe. So you want some of that 11% return every 6 days that we've done in 2024? Well, our next call would be the first week in January, Thursday, whatever date that is, Ryan. I don't know. But we'll see you in a couple of weeks, Thursday morning at 9:15, and we'll be sniping to start the new year in a couple of weeks. Hey, Ryan, thanks for all you've done this year, man.
Thank you.
Happy holidays.
Thank you for that 91% win rate.
And our win streak's 11. I get nervous once we get over 10. But we've had 11 straight wins, and it's nothing. Well, I guess it's magical, but it's all rote systems that I think anybody can master with some practice. And this is a free show. So Merry Christmas, everybody. Happy Hanukkah. Happy Kwanzaa. We do love you here, and we'll see you all in the new year. Ryan, thanks a lot. Happy holidays. See you all, everybody.